Just in terms of our business survey, so this survey was conducted over the last couple of weeks across the Wollongong region, and I think what we can certainly see from this sentiment survey that the region has reached, I believe, the bottom in terms of economic activity, and we are now seeing some good seeds and good signs of recovery. And yes, we've got more businesses indicating here that they're doing it tough compared to businesses who say things are going okay, and it is quite different as we look from industry sector to sector. But at least at the moment we are seeing an upward trend in overall trading conditions. Yes, it's still running around about -7 net, but it's certainly a lot better than what we were doing in the March quarter of this year, and certainly the same quarter of last year. And it's quite interesting, and I'll probably, in terms of a forecast, and we don't normally get our forecasts right, unfortunately, although Rob, I'm sure you get your forecasts on the mark all the time. But this is the result that the businesses, local businesses, felt they were going to get in the September quarter when they were forecasting, or when they were giving us their June quarter results. And they actually, for one of the times, come right in on the button in terms of where the actual results come in once we surveyed for that quarter. They generally are a little bit more optimistic for the future than what it actually comes in. So if we can say that the local business community are starting to get a little bit more optimistic in terms of what's going on, this is their expectations for the last quarter of this year coming up. Yes, it's a seasonal quarter with Christmas, but certainly if we can just get over this bar line, this zero line, and have more businesses performing better than businesses a greater proportion of businesses that are on the upswing than on the downswing, it'll show that at least we are starting to move in the right direction. So I think this is a very encouraging sign, and certainly it does come on the back of a lot of announcements of major investment and construction that's going on in this region, and will go on for a couple of years down the path. When I say it is quite different as we look from industry sector to sector, yes it is. So if you look at your finance, property and business services sector, a lot of people here in the room are from that sector, we had just as many businesses saying they're performing well compared to businesses that were performing poorly. So we ended up with a balanced net zero result. It was an improvement on the last quarter, so that's one of the sectors that started to say things are getting a little bit better. The manufacturing sector, we had a net -5%, so we had more manufacturing firms indicating trading was sluggish compared to those who were indicating trading was okay, and that was a little bit down on the last quarter. But we all know how manufacturing has been over the last 12 months, and if I had the historical graph there, it's certainly -5 is a lot better result than what we had towards the end of last year or the start of this year when it was around about that -15 mark. The construction and transportation sector always seems to be up and down, come in at net -14, which was a little bit below last quarter, but again, certainly better than what it has been. And encouragingly, it was the retail and recreation sector that sort of drove the overall result. So we know retail has been sluggish for a number of years, but in terms of an improvement, we've seen a remarkable improvement in the quarter that we've gone through. Recreation linked to tourism, and our tourism numbers are still good. People are still visiting the area. Occupancy rates are still quite good. So even though we had a -9.5, it was a +8 compared to the previous quarter. So there is some disparity there as we go sector to sector, as we know. And then on top of that, an area that we don't sort of survey because it's such a small in terms of organisations is our coal mine industry, or the mining industry. And we all know how that seems to be chugging along quite well at the moment. Consumer confidence. This is an area that we all know has been holding back growth. People are not out there spending, they're winding back their debt. We're all aware of those things. Now, in our consumer survey that we run last week, so these are the first numbers come out, the overall consumer confidence index for this region was at 79 points. Now, that doesn't mean much, but it was at least level and a slight improvement of what it was on the June quarter. Now, what drove that overall index? There's a number of indicators that we use to develop that index. It was the financial position that people felt they were going to be in the future, which is interesting. So this is 12 months down the path. We asked people how do they feel about their financial position 12 months down into the future, and they're quite positive. So we've had this big jump of plus 10 points in terms of that index of how people felt. In terms of their financial position currently, it was at 93 points, which was slightly up on what they felt in the previous quarter. The national economy, in terms of how they feel about that and how it's performing, we had no change. And the job availability, in terms of the number of jobs available out there, was also a no change. And the other interesting index that's not in this chart, but certainly contributes to the overall index, is whether it's a good time to buy a new house. Now, we've had interest rates come down, so I thought that that index might jump in the last quarter, but it didn't. So that's an interesting thing we need to look into. But certainly in terms of what people feel is going to happen over the next 12 months in their own financial position, it's quite positive, and that's contributed to our consumer confidence index increasing slightly. So if we take some long bows there in terms of the sentiment the business is giving us and the sentiment the consumers are giving us in this region, at least there's some encouragement there that we have reached this, I suppose, bottom of this cycle that we all feel that we've been in for quite some time, and things are going to start to improve. Now, Rob will probably contradict me in terms of some of the national figures, but at least, you know, we've gone through some shocks here in terms of what's happened with some of our industries than other areas haven't. In terms of our unemployment rate, I know this time last year when we were all discussing what was going to happen with BlueScope in terms of how the flow-on impacts was that going to be in terms of upstream and downstream, and there was some scaremongering at the time that we're going to reach double-digit figures in terms of unemployment. So if you look at this top line, so this is the Wollongong region, this purple line. Yes, it has been tracking up for that 12-month period, sitting around about, I can see there, about a 7%. So when we remove some of the bumps out of the data from month to month, we're estimating at the moment for the region we're sitting at about 7%. The state is sitting just above 5%. So I think we've done quite well to keep that unemployment rate there at such a level, considering the dislocation that industry's experienced. So we've seen job growth in other areas in the services sector, and we've seen some soak up some of those manufacturing jobs into the mining sector. Building approvals, anyone a builder? I suppose we're trying to encourage, get some positive, I suppose, feedback out of our building data. The residential building sector has been quite sluggish for a number of years in this region and also across the state. We've had a slight rebound here in the number of building approvals in the June quarter, the latest data that we've seen, and that's mainly come about with this line, which is our unit approvals, which does get a bit lumpy in terms of developers coming on board at certain times, but you know, they're still well down. And if you run this graph well back all the way back to the turn of 2000 period, our building approvals were generally around the 1,000 mark. We're now sitting well below or around the 400, so you know, about 40% of those levels. So they're still quite low, but at least we've had some improvement in that last quarter. This is a graph I really like. Now, this is the, I suppose, investment in bricks and mortar. So this is in construction activity. So it's not talking about capital expenditure. So this doesn't include the announcements of BHP, Billiton, with the expansion of the mines of what was close to 900 million. It doesn't include some of the work that's happening at the port. So this is a lot of the stuff that we're seeing in terms of commercial buildings going on, in terms of the retail developments that are going on in the city centre and also at Shell Harbour and other types of development of factories. And as you can see, this purple line here is the Illawarra. So we're in millions of dollars. So we're on the left-hand scale there. We're New South Wales on the right-hand scale because we're in a different number of billions of dollars. But we can see the surge that we had when we had the building stimulus from the Commonwealth and the state government. That sort of finished off and the private sector didn't really take over. But what we've seen in the last 12 months in particular, we're starting to see private sector investment, and we've had this massive surge in terms of investment in bricks and mortar type development. Now, a lot of this hasn't started yet, so there is some confidence there that going forward that there's going to be a lot of activity, particularly in the retail, the office type area, and maybe some factory type work. Plus on top, you put the plans that BHP's got, the plans that the port's got, roads are happening, hospitals and those type of things. And also you've got education in here as well, some of the things that the university's doing. So I think that's quite encouraging in terms of the future for the next 12 months to 2 years for this region.